What's going on, guys? It's David Lee Goodman. Today, I wanted to bring in one of my go-to lenders in the Nashville market, and he works all, everywhere else. One of the reasons I love working with this guy, this is Stephen Cushing. He works with On Point Mortgage, licensed in a bunch of different states. He's been in the business for 15 plus years, just a lot of experience. He's come through on some dicey deals for me, so he is definitely the guy to talk to. Do you want to just talk what you do and why it's good to work with you, and we can get right into getting a market update on what's going on with interest rates?
Yeah, for sure. My background is coming from lenders and then banks for about 11 years in total between two different companies. One being a very large lender, and then also working at a bank for almost 4 years. What we are is we're an independent mortgage brokerage. So when I started the company, it was really just to give more options to consumers. So when people are, depending on their scenario, not everybody fits the average box that a bank's going to write. And then we have lenders that we would send that client to actually help them achieve getting into a home. So I would say that's the biggest difference, is just having more availability to clients and allowing them to get into homes with more creative options if we needed to go that route.
And from my experience, we're working with you so far. So I work with investors and first time home buyers and everything in between. So we've been able to work on deals where, say, it's a first time home buyer who's just getting qualified, and we need to know the layout and the hoops that we're going to go through. Stefan's a great option for that. He's also a great option for an investor that where the margins are very, very tight right now, and he's able to like get the best deal that we can possibly get just because he is a mortgage broker. And so he's shopping out those deals so that you don't have to. And that coupled with the experience, it's just like it's super key. So thanks. So today I just wanted to get from you. You sent an update to me last week, which I thought was brilliant. It's mid-December 2023. The big thing that's influencing our market and the Nashville market, which, by the way, we're starting to see actually flatten out at this point. We've been seeing month over month, year over year appreciation still to this day. Recent reports came out recently that we are starting to really see a real neutral market. So what have you seen in the last month or two? What are you seeing today, and what are you kind of predicting for next couple months?
And again, this would just be a prediction, right? I would say over the course of the last, call it 2 year and a half, I mean, really since August of 2022, when the market started, we started seeing massive increases in interest rates. Now, surely we had a few, but rates were still in the fours and fives. And then, right, August of 22, just from looking at our numbers, right, there was kind of a shift. What I've seen, at least for the course of this year, is with interest rate being where they were. I mean, prior to maybe this last month of them coming down, but let's use October for an example. Like October, I mean, it was the highest levels of interest rates that we have seen in, I mean, 15 years, right? Really 20 years, I think was the number, as far as where the level of interest rates were at. So I think that has a lot to do with the leveling of the market, as far as maybe not home appreciation, right? Because your sellers out there, given where interest rates at, have to give these incentives to buyers to make an offer on their home. And a lot of buyers, they're not trying to sell their old property right now to take a higher interest rate and higher payment. So that's why you're either seeing investors or first-time home buyers really influence the market. That's what I've currently seen. I think as far as the prediction of where the market will go, I definitely do think if rates continue to go down, we are definitely going to see that appreciation number go up. It's a supply and demand thing, right? There is only so many houses right now in the current market. There's only so many people willing to sell them. There's a lot of people obviously sitting on the sidelines waiting for rates to go down. And then when they do, right, it will bring demand. So as far as these seller concessions, I mean, here's an example. I mean, just 2 weeks ago, right, we helped a client. They had to offer over asking price because of where rates went within just a 1 week period, going from like mid sevens into the sixes and seeing sixes on a rate sheet, the demand that happened just with that one
Right.
property, buyer had to offer $10,000 more. And these are kind of the same things that we were seeing
Was
in
that a couple
2021.
weeks ago that
Yeah.
you saw that?
So we saw this just a couple weeks ago, and that's just one property in particular, right? And that
Right.
to me is a direct sign of what I've really been, trying to coach people is, hey, you could buy the property right now, you're likely going to get concessions. Now, at
Right.
the end of the day, affordability needs to be a factor, right? So I'll never guarantee that rates are going to go down. If somebody's comfortable with the payment and they can buy the house, I suggest right now is probably a good time. I think those seller concessions and reduced purchase prices and things like that, if rates continue to trend downwards, I don't really see that being on every deal like we're currently seeing. 95% of loans right now have some kind of concession or reduced purchase price on it.
I was curious, just like on the micro, like in the last month, or even like from your email last week, you had an update that October was bad. What have we been seeing like day to day recently? Where are the interest rates as we speak, and what has changed? Have they improved? Where are we at?
So, definitely on a day-to-day basis, market does change. Very minute on most days. But from where we were, call it the end of October and in the entire month of November, right, when we were looking at interest rates in the eights, high sevens, 8%
Right.
in October, and kind of starting to see that trend downwards. Most interest rates that we're seeing right now, and again, depending on qualifications and whatnot, in a scenario, but most of them have all been in the sixes, right? Higher, higher sixes for your conventional options, and then lower sixes, right? Even into the fives. We just signed a client up today, right? There was cost involved with it, but it was a 5.625 on an interest rate for an FHA loan. So
That's
we're
awesome.
we're really starting to see that, which again is going to open up more
Was that a seller
affordability.
concession or like a combination coming from the buyer and the seller, or how did that work?
So in that particular scenario, that buyer did receive a seller
Mhm.
concession. So
Right.
we were able to utilize all those seller concessions to cover their costs, even get them again, a rate in the mid fives right now. So,
Right.
and literally that person's just bringing in their down payment. So it was a huge win for them.
We talk about affordability. Two
Mm-hmm.
years ago, you had to bring a lot more money to the table just to close the deal, right? So that
100%.
was $10,000, $20,000, depending on the purchase price, like that you had to have even over your down payment. You had to have some chunk of money to guarantee, because you're going over what it should appraise for you. So you got to tell Mr. Seller that we have this money in our pocket just in case this doesn't appraise where it needs to appraise. So it is a lot cheaper affordable, like as far as closing on a property today. The monthly payment's going to be a lot more right now. So
Mm-hmm.
that is the balance, and you can shop it out. So
Quick
yeah, go ahead.
comment on that, right? Like when it comes to affordability, and it's a great point, right? When it comes to the estimated cash you would have to bring to close. Like right now, if a buyer can get, call it a $10,000 concession, that's $10,000 less that that person needs to bring to the close. Now, assume, if we're comparing, call it a, just for simple math, a 7% interest rate compared to hopefully one day they get back in the fives, right? But that payment difference, depending on the loan amount, like 300,000 loan amount, we're looking at a $250 difference on monthly payment, give or take. Let's use that as an example. But like, if you could save $10,000 out of pocket and maybe just spend the extra 250 a month for a
Mhm.
couple months until the market does go down, you're winning in that
Right.
regard.
I wish there was a better way to kind of just like break that down. But at the same time, you can't predict if interest rates will go down. I think 2 years ago, when it's coming up on 2 years, I guess, like when this started, I think a lot of us would have predicted by this point that the rates would have gone down. Right. So I think we're not making that same kind of assumption. So that's why it's so important to, like, if you're working on a deal as an investor and the numbers pencil out in this market, you probably got a really solid deal. And as a first time home buyer, it's really hard to, even with the interest rates right now versus what you're going to be paying in rent, it's always going to make more sense to own your own property, lock in the price, and start building that wealth, clock, that needs to start ticking with your first property so that you can kind of trade up in the future. But it is unfortunate that the affordability is not there, but at least we're not having to go 10, 20, $30,000 over asking price, because that was holding people back too. Like, I wasn't working with a lot of like normal first time home buyers. I was working with people who had, money from somewhere that they could just,
Yeah, gift
they had to
funds or
flaunt.
whatever,
Right.
family coming in
That
and
had to
here.
be the situation. So,
Yeah.
you said October and November rates were kind of as high as they have been, right? And we're starting to see the numbers now where we're starting to see where our market in Nashville has neutralized. You sent a video in last week that they started going down a little bit. Is that where they're at now? Where have you seen it in the last couple of weeks, just so we can give a quick update, and then kind of where are they at like today?
I mean, I would say that the market's the same as what I sent out last week. I mean, that
Mhm.
was a significant difference from the week before.
Uh-huh.
And so what we saw as
We're
far as
still in
it's,
that.
yeah, we're still in that.
Yeah.
Hopefully the trend kind of continues. I mean, it's yet to be seen. I've seen all the articles, or it wasn't really an actual article. It was more of like, hey, somebody did an interview, and it's projected that the Fed will drop interest rates 6 times over the next 12 months. Now, again, whether that happens or not, right? Like, hopefully it does. Again, speaking to affordability, but with that, it's a catch 22, right? If there is a significant difference, right, I'll definitely make sure to let you know so you can let everybody else know.
Hmm.
But for right now, I mean, it's pretty much what it was last week.
So we've got a minor change, and so for let's say it's a home buyer buying their first purchase, or it's a primary home buyer,
Mhm.
kind of, can you give me like a range of where that number is at right now
Like in
versus
terms of
where it
an
was
interest
two
rate?
weeks? Yeah, yeah.
Yeah. So, I mean, here, hold on. I got a little calculator here. Like, let's call it a $300,000 on a loan amount, for example. Like, if the market 2 weeks ago was, let's say, a 7.625 on an interest rate, on a
Hmm.
$300,000 loan, just the payment, not with taxes or insurance or anything like that, would be like $2,123. That same exact loan as of today for 300,000, given current interest rates for a first-time home buyer, is $1,970. So within 2 weeks, that person just saved $153 on a monthly payment just in 2 weeks. So that's one way of looking at it, just monthly savings. The other way to look at it is, now let's just say you were approved for $300,000 loan amount at
Hmm.
that interest rate. Now you can actually buy a more expensive home. So to get to the same number with the lower interest rate, essentially now you could buy 25,000 or $30,000 more of home, just given where the rates have gone down, which, I mean, sometimes is a completely different category of home versus the one that somebody
Right.
might have been
I
looking at
do
before.
know from 300 to 325 to 330 in our market, that is significant.
Yeah.
So if you were pre-approved 2 weeks ago, a month ago, versus right now, definitely check back in with you on where you're at now, because I'm thinking of one guy in particular that we're working with that's going to make a big change, because finding something that's what he's looking for in the 300 mark versus 325, 330 is, it's a big leap.
Yeah. I
So
mean, more buying power and more options is really what it's going to do.
cool.
Yeah.
And as we said earlier, with that, a lot of buyers have been on the sidelines, and as that happens, just so our audience is aware, as that happens, more buyers will be competing against more buyers, and we will have to bring more money to the table. So I would say it's still like we're getting right before the holidays. I still think things are leveling out and neutralizing. If that interest rate should drop more, we will see more buyers jumping in and causing that bidding war situation that that's my prediction at least.
No, I mean, I think it's
Yeah.
proper
Cool.
prediction for sure.
Okay.
Yeah.
Well, thank you, Stefan. I appreciate it again. I'll put some information about how someone can get a hold of you. And for our clients that are already working with Stefan or pre-approved wherever, If you want to get an update on where your buying power is currently, I would suggest you do that now because we did see a significant change in the last 2 or 3 weeks. So if you need it, you'll need to get an update on that if you haven't looked at that in the last 2 or 3 weeks. So again, thank you, sir. I appreciate it.
Absolutely. Thank you.
Okay, and we'll talk to you guys soon.